Hello YouTubers, and welcome to the Independent Investor. I just opened a new position in KBL.TO linen. It's listed on the TSE. The symbol is KBL. That's on the TSX. It's a company I've been following for some time, but it's always been too expensive to purchase. It's kind of what I would call a stalwart stock. It was a name Peter Lynch gave back the companies he held within the Magellan Fund years ago that were pretty consistent and steady growers in revenues and earnings. KBL seems to fall into that category. Its revenues, this is using Morningstar, something that I subscribe to. It gives a lot of information. It's got all your all the financial data going back 10 years, and we can see that in 2007 revenues were 74 million and fairly steadily increased to the last 12 months to 160 $1 million. Also, the earnings are up and down a little bit, but the overall trend going from 75 cents 10 years ago to $1.45. I think this year is about around $1.60. The shares outstanding have stayed reasonably steady, increasing a little bit, so that's indication that the company is financing itself. Debt levels are pretty conservative. The PE ratio is a little bit on the high side, but they've had some large capital projects over the last 2-3 years. Had a new facility built in Edmonton, a new facility built in Regina, and last year they just finished a new facility in Mississauga. Their business isn't exciting. They do laundry services for the healthcare industry predominantly, and hotel chains. And there's a bit of growth in there just because of demographics. I mean, we see more hospitals being built today than schools. Also, they're a bit of a consolidator, which is sometimes interesting. Boring sectors of the economy sometimes don't get that much focus, and so a very good player that's very efficient can do quite well. And I think with these new facilities are state of the art, a lot of automation, that they'll be able to capture more market share. Plus, it's a lot easier for a hospital to deal with one service type company. Again, I said I'd follow this for a while. I use eSignal for my technical analysis, which you almost need if you're going to follow a lot of stocks. Just because you'll come across a company that you like, but it doesn't mean it's a good investment because it might be expensive. And that was the case with KBL here. You can see back in 2016 it got up to $57, and which after a run all the way from down for around $10, so it got quite expensive for a company that's only really growing like 6 or 7%. At that time I put an alert on it, and nice thing about software like this, you can have that alert on for years, and then when it comes down to a price that you figure is a little bit more reasonable, you can take some action on it, which I did last week. I opened a small position. It's still a little bit on the expensive side, but finding a reasonably going company at a good valuation right now is like finding a needle in the haystack, because we're towards the end of a bull market, and typically all valuations are getting a little bit stretched. But I like they're going to continue to grow, and their dividend is actually quite good. It's about 3.1%. Their dividends have been steady from year to year, slowly increasing. And the dividend payout ratio is quite low. It's right now about 39%, 40%. So that means what they have left over at the end, earnings, 40% of that goes out to the shareholders. And that leaves them 60% of that income to reinvest and grow their company. So it's quite conservative. That payout ratio has been higher in the past, and it could come up, but there shouldn't be any problem in the future of them increasing that dividend payout. That's a Canadian dividend, so it's also treated quite favorably when it comes to taxes. This is just, because I think this might be a longer term holding, I will spend a day going through all the last couple of years' annual reports, and I have a spreadsheet I use to try dig in a little deeper to the company, but on the surface it looks like a pretty solid position. I like that they are the dominant player in Canada for this service, and I don't think that will probably change. I think they have the leadership by a wide margin. So leadership, you know, a strong presence in the market is definitely one of those things you look for in an investment. I also like one thing that it's been called the triple waterfall, but it's more of a technical sign. As you can see here, we peaked, then we had a drop in the market price. It came back, traded sideways again. We had another drop in the market price, a small recovery, and then a drop again into the $37 range. And now we've been kind of trading sideways. So a lot of times on this third leg down here, you'll have a lot of old investors that maybe bought right back in here, saying, okay, I've had enough, maybe there's something going on I don't understand, and they decide to lock in their profits. And then you get investors, well, kind of like me, that hadn't owned the company but knew that it was a good company and had potential at this price to not be a bad investment. And then you kind of see this here, back and forth. And we have, the other technicals are showing some improvement. So my hope is that it does steady out, and even if we get back to this price in a couple of years along with the dividend, you'd be looking at a total return, you know, of 7% or so. Also, when I do open a position, initially I just buy a few shares, wait a month or two and get to understand it better. Also, there's not a clear reversal here, and we could easily drop, you know, down into the $35 range or something like that. And then I'd have to reassess it, but if there was really no change in the news, then that would maybe just be a better opportunity to buy some more. So very seldomly is there really a rush to buy lots of shares. Maybe on a company that's really breaking out on a major news event, you have to act a little bit more quickly than that, but typically just spacing your trades out and slowly building a position as you feel more confident is usually the better way to slowly build your portfolio. That's about it for, like I say, I will be reviewing this further, as I feel it is a good position and hopefully one I can hold for many years, and I'll give a further update then if there's something that I missed or some major news. But right now I feel pretty positive about the long-term outlook for this company. It's a good, strong Canadian company, so I feel pretty positive about it. Anyway, that's all I have for today, and that's kind of my spotlight stock of the week, and I look forward to seeing you all in my next video. Thank you.